I want to take the next 2 to 4 minutes to tell you guys about the dividend stock market. When I was younger, I had a real interest in the market, and I could curse my stepfather out to the ends of the earth for not teaching me about how to deal in dividend stocks. So what a dividend stock is it's a stock where the company's giving the shareholders something back in return for holding on to the stock for either a month, which is a very nice deal, a sweet deal, a quarter, or a year. In the case of a dividend stock, you can find certain companies that will give you a 10 to 12% yield. And what that essentially means is, I'll give you an example. There's a company right now called Capitalia Finance. CPTA is a ticker symbol. Well, with that company, they give off a yield of over 10 cents on per share on a stock that's only $14 a share. So if you were to buy 100 shares of that stock, then essentially you're getting like 11 cents, let's say, times 100, so that's $11 you're getting a month. I mean, that's a sweet deal. So you're making $11 a month off of a $1,400 investment. So right there, that's what? That's 110 plus, 22? So that's $132 a year off of a $1,400 investment. That's a 10% turnaround. You're not going to find a single regular consumer bank in the country that's going to give you a 10% turnaround. Normally, when I choose dividend stocks, I usually use either dividendchannel.com or just dividend.com. And both the selectors, you got to be careful about certain things. And the first thing you have to be careful about is you have to be careful that the dividend is sustainable. Recently, there was a stock called Wheeler Real Estate Investment Trust, WHLR, and they yielded like 12 cents a month on a $1.70 share. What happened was, I knew it was going to happen. Everybody knew, and everybody with half a brain knew it was going to happen. Was they cut back on the dividend and switched it from a monthly dividend to a quarterly dividend. And in addition, what they did was they also did a reverse split, which means that my 80 shares in the company were cut down to like 13 shares. I think it was something like a 5-to-1 or a 6-to-1 split, and it was ridiculous. So I'm like, I can't make any money here anymore. I'm out. But I mean, if you're a middle-class person, you're trying to put your kids through school, just please look at dividendchannel.com, take $500-$600, put it in a Scottrade or an E-Trade account, and see where it goes. You really have nothing to lose, because the dividend itself is going to pay back the investment within 2 years. You're gonna make your entire principal back, assuming that the stock went to nothing. If the stock increases, say, from $14 to $16 a share, well, then you just made money on both ends. You made money on the dividend, plus the principal investment has increased, 10%, 11%? I mean, it's a beautiful, beautiful thing, dividend stocks.